Hi, and welcome to the Perigee 2021 Executive Insights Report Release event. I'm Ryan Ogden. I'm founder and CEO of Perigee Partners, and I'm excited to bring this to you this morning. This is a one-of-a-kind study that we've put together. You know, we looked around for some insights, some actual research on small and medium businesses in America, and we just didn't find the kind of research we were looking for. So we went and asked you, the CEOs, CFOs, COOs, the executives of SMBs in America, some questions. We got some really great insights that we put together in this report. And today we're going to, through a panel discussion, we're going to dive into some of those insights, and I hope you find it really valuable as we have already. Also, we have an offer at the end, so make sure you stay on for that and watch for follow-up. We'll have a replay of this, and we'll have other follow-up materials for you and future roundtable events like this one. So here's what to expect. We're going to have, in the audience, you can participate through the Q&A. We'll respond. We may respond throughout, but we're going to mostly save the Q&A to the end. We'll be responding to any questions you have then. We'll try to keep an eye on it, though, as we go. And but we're gonna have a panel discussion. So we'll go through the report. The report is live, published. I'll show you that. And as we go through it, we'll have some panel discussion about it. As I said, feel free to send in your questions, and we'll get to those through the Q&A. This platform may be a little bit different for you. So if you haven't noticed yet, there's an arrow in the top corner, kind of an arrow with a line next to it. And if you click that arrow, that will expose the Q&A panel, and you can submit things that way. So I'm going to start by introducing our panelists. I'm excited this morning, really thankful. We're really fortunate to have these panelists with us. And guys, I'll go in alphabetical order by last name if you'll join the stage with me, but I'll prompt you when to do that. So I'll start with Matt Kraft, and I'm just fortunate to call these folks friend, and also to have them here with us this morning. As I've talked with each of these folks, I walk away with deeper perspective and just smarter about the world. So I'm excited to have them here, and hope that you also get that from our discussion. So Matt, if you'll join, I'll introduce you. If you can turn your camera on. Matt is COO at Standpoint. Hello, Matt.
Hey, good morning.
Morning. And he's COO at Standpoint, a total restoration company in the residential and commercial markets. And he's also on the board of Cruise CMBT, or I guess you pronounce that Cruise Combat.
Yeah. Cruise Combat.
That's what it stands for. And they're in the combat apparel market, which I haven't had a chance to talk. I want to hear more about that and what that means. But prior to Standpoint, his corporate executive experience includes being VP at GM Financial, and he's served in SVP roles at Associate, which is a worldwide leader for HOA and community management. He and his wife are here where I am, also in the Dallas, Texas area, with their two boys. And although I doubt he finds much time to do it, I know he enjoys the occasional time he gets to play some golf and do some boxing. Again, Matt, welcome.
Thank you, Ryan.
Next, I'll introduce David Touwsma. David, if you can join as you're doing that, I'll say David is the co-founder of EFO Ventures. Hi, Dave. Good morning. We can't hear you, so I don't know if there's something you can do to adjust that, but
yeah, I had it on mute.
Yeah, perfect. You're with us now. Dave he's co-founder of EFO Ventures, which is a private equity investment firm, and their portfolio companies are mainly focused in the electric vehicle or EV industry. I know Dave, I think that's kind of the broader industry, and Dave's most recent background was COO at Gotcha, and they coined the industry term of mobility as a service. And I think that's really more of your portfolio company space. So feel free to fill in, or we can dive into it more in the discussion. And so he, including his other prior experience as CEO of residential services brands, which a family of brands, which included Mosquito Nix, Christmas Decor, and Simply Cool. He's also founder and CEO of Lime Tree Retail Gift Store chain. And he started his career in the technology and consulting industry with progressive roles at Anderson Consulting and I2 Technologies, among others. He and his wife live in Atlanta, Georgia, with their 3 kids. And he's a trustee on the Boys and Girls Club among other leadership-oriented organizations. And whenever they can, they make their way around in their vintage 73 Airstream on their 50-state tour. What's the number up to now, Dave? How many states?
We still got a lot of work to do, but we're at about 10 right now. Which we've
Okay.
accomplished, so.
Hauling a family of 5 all around the country, I'm sure, has its challenges. So,
Yeah, and fun.
Yeah. And other hobbies outside of that kind of dovetails well into the Airstream touring, are pretty much anything in the outdoors, right? Hiking and all, and anything on the water. All right. So again, welcome. Thank you. I'll introduce. Yeah, thank you. So Troy Vetter. Troy, as you're joining, I'll start. Troy is the co-owner and managing partner of Legacy Glass. Hi, Troy. We can see you now.
Morning.
Good morning. Yeah, we can hear you okay too. So Legacy Glass is about a 1.5-year-old glass fabricator here in Dallas, Texas area. And, like my other panelists, what I love really about all of them is they've earned their entrepreneurial and small business chops. But early in their career, they all have kind of big corporate backgrounds, so they bring that perspective to the table. And so like with Troy, most of his prior career was in the tech industry. Before he decided to just get into glass manufacturing, he was in the tech industry and with recognizable company names like HP and EDS. And he served across the C-suite, including roles of chief strategy officer and chief operating officer. And he also served our country as a vet of the U.S. Air Force. He's been married for 27 years. You can see in the background the picture of his 8 kids. His family. There was not a break on the line. I did say 8 kids. So again, hey, welcome everybody. Thank you so much for being on the panel this morning. Hey, what I'll do now is I'll jump in to the report. I'd like to just kind of fly over it and show you a little bit about what we have. And then as a group, we'll discuss some of the key insights that we have there in the report. So I'm going to share my screen, and our report is actually hosted live. So I'm going to show you, this is the live hosting, actually right on our website. We'll be following up with you, and like I said, we'll have a replay. We'll have this link for you. This is hosted right on our website. So here's the report. Can you guys see this okay as I think I'm sharing?
Definitely.
Great. Thank you. I'm just going to do one more thing, and now I can kind of see you guys and the report. Okay, so if you look as you navigate, you can go through each page, or you can just pick a page and jump to that. So we have a cover letter, and then we have the table of contents. So these are all hyperlinks, so you can jump that way, or you can do it this way and jump to a specific page. So before we get into some insights, let me just give you a little bit more detail about the report, who responded, that sort of thing. So we did a survey at the end of last year, as you know. If you jump toward the end here on the methodology, we also cover a little bit about our sample size for any of you really get into all the data statistics and everything, how we came up with what our minimum sample size was, and how we used things like a weighted average of the midpoints and things to convert some of your answers into specific numbers for analysis and all that. So there's a good juicy details on the methodology page. And then here, let's look at who actually responded. You can see the majority of those are in kind of that sweet spot of 50 to 200 employees. I think I'll switch to this little pointer here. Also down here on job role, you can see most of them, about 70% have the CEO title, with the rest being CFO and COO. There are some other which were like, an investor, owner, but anything that was like a managing partner or whatever, we converted to a CEO title just to have a, kind of a normalized title. And then over here, you can see all the different industries that are represented. And that does slice and dice the data up a bit. So we weren't really able to dive into answers by industry, but we were able to dive into some other areas that I'll be glad to show you here. So in the executive summary, we have some key points, and I just want to jump in right here. So let's start with the first question in the survey was a look back at the prior 12 months. And again, this was everybody responded to this at the end of 2020. So this was essentially asking you about 2020. And so here we see 62% of folks said that the economic conditions that impact their business. So let me distinguish this real quickly, actually, before we go on. When we're talking about economic conditions, we're not talking about Wall Street. As you know, a lot of times that's pretty well separated from Main Street. So this is more of the Main Street question. These are the conditions that impact your business. And so anyway, we can see we're probably not surprised to see that the majority said things were worsened in 2020. But what I found interesting, okay, so 62% is not an overwhelming majority. And as we hear through our network and through media, et cetera, we hear that, actually a lot of people are doing really well. If we look up here at how many have improved, and then also some stayed the same. So the takeaway here that we summarized was just, gosh, if you add up the stay the same and the improve, it's about 2/3 of the number that it got worsened. So for that many, two-thirds as many as the worsened number, it wasn't worse. It was either the same or better. And so we see that there's been some selective impact here. And of course, some people are really feeling the brunt of it, and others are even thriving. So why don't I pause and just say to our panelists, do you have an initial reaction here to this information?
I would say that makes a lot of sense. I mean, some people have benefited this year. I know in manufacturing, we had high points when other people were having low points, finishing. People had to finish jobs quickly and get out of houses and get out of buildings. So we kind of hit the bottom, the nadir of the COVID bump after probably everyone else did. Ours came in the summer, and then we came back after everybody had already kind of got through the worst of it. It took us a few more months. So depending on when I answered that question, I could have been any one of those blocks. At the end of the year, I would definitely, you look across the trend line, it was a tough year for us and for all of our kind of customers and partners. But it wasn't, thank God, it wasn't as bad as it could have been.
Yeah, that's a great point. Thank you, Troy. Great perspective on, it was kind of a roller coaster of a year too. So depending on when the question was asked, this could, and obviously our goal would be to more keep the thumb on our pulse and be able to get this kind of data on a more consistent basis in the future. But yeah, great observation. Thanks for your kind of, helping us get in your shoes there for a minute. Matt or Dave, anything to add on, or we can dive in later?
I'd love to share. I think what somebody has said to me along the way here is it has accelerated the inevitable. And I know that's not necessarily occurred in everybody's business. Some people, having some challenging times, but if you had a business that was, destined to be really challenged, it accelerated that process. Or if you had a business that was going to be successful, it allowed you to really thrive in this environment. So I think being in the venture capital space and having different investments, I've had the opportunity to look at a number of different companies and pull back in some and fuel some others. So it's been an interesting year for sure. And across the board, I could obviously answer in all those categories for the investments that we've made. But I think it's accelerated what might be the writing on the wall.
Yeah, Dave, I think that's a great point. And there are some comments. We have some open-ended comments in here as well that I'll show you later. And there was a little bit to that too. But I think it's so common. We hear this as we talk with friends and we're reading reports about how people are doing in the marketplace, that term accelerate, and you use the term accelerates the inevitable. And I think that's definitely happening. And then I think something else is doing is it's accelerating our innovation, so people are more open to trying new things, partly because they have to, or because, it's high stakes. It's just the right time. What do you have to lose? Sure, we'll experiment. And driving even things like this, doing more virtual discussions that we might have been doing before, but we might not have been doing it as prolifically as we're doing. So that's a great observation too, Dave. Thanks.
Yeah. I'll give you one simple example of something that's come about is, I think in other countries, people are very familiar with QR codes. And in the US, until this pandemic, we have not really used and embraced the QR code until we go to restaurants and have to scan their menu with it. So everybody knows what a QR reader is now and how that comes about. So that'll introduce some new technologies, right? So good point, Ryan.
Yeah, that's a great example too. Hey, let me also just say real quickly, I should have said up front, we have about 30 minutes. So just as we kind of watch and we'll gauge, and I'll watch the time and make sure we're pacing ourselves well here, but just want to make sure we're all tracking toward that. So Matt, any thoughts or comments, or we'll have plenty of opportunity to as we go, if not?
Sure, I'll be brief because I know we're
Sure.
trying to continue on here, but we saw some shifts in our business of basically revenue moving to the right or into 2021. And then in our apparel business, we saw sales go up, similar to what Troy was talking about. Manufacturing overseas slowed significantly. So anybody with American manufacturing came out of this with a pretty decent win, and that's been good for them. So a lot of challenges, I think, with this. I think we learned a lot from 2007, 2008, that period, on how to be reactive to an economic downturn and do the right things earlier. I still think there's a significant amount of unknown that you could either take as bullish or just continue to be ready to shift at any point in time. And I think businesses are much better at being agile than they ever have been before.
All right, great. Wow, thanks so much, guys, for the extra perspective here. So let's go on and let's look ahead, okay? Let's stop talking about 2020 and look. The results almost flip-flop when you look at the next 12 months. So as you see here, do you believe the economic conditions that impact your business will improve, decline, or stay the same or decline over the next 12 months? We see about close to the same, about 54%, just over half, are believing that things will improve. Whereas we see only about 15% believe in decline and 31 will be the same. So a couple takeaways that we had. One, and by the way, if you compare this to other, you can't really compare apples to apples. This is a different question and it's a different audience and all those things. But if you compare to other economic indicators, other confidence indexes and things like that, confidence hovers around the 70% mark if you put it on a 0 to 100 scale in a normal year, if you want to call it that. So, I do see, we're wondering how guarded this is, but, for the most part, everyone, the majority, not everyone, the collective voice and the majority is saying, yes, things will improve or stay the same. Whereas a very small amount believe that things will decline. So, we didn't hear anything in any of the comments, by the way, about any kind of any recession or any government, with the government subsidies, maybe that's going to catch up with us and we're going to see spending curb or anything like that. So I thought that was interesting. I thought we might see some more about that. And the election, of course, hit in the middle of the survey. So a lot of the comments were pre-election. So they were more thinking about, let's see what the outcome is. There's this uncertainty out there still. But those were all interesting observations. And, I'm eager to hear more from you guys as we speak and from the next survey to hear, how does this progress? What does normal look like? What are we looking at for the next 12 months? I got a little bit of chuckle and I thought, is this our rose-colored glasses entrepreneurs that think that, the next year is always going to be better? Correction, recession, let's not talk about that. And we did look, by the way, at role. We broke down by role between CEO, COO, and CFO, and we'll talk through that. That was some interesting insight there. So let me pause, and again, I'll just sort of throw this out to the group and see if you have any general reaction to the next 12 months and the outlook there.
I'll take a stab first this time, Ryan. I do think there is a little bit of rose-colored glasses here with our entrepreneurial spirit, but I also believe that, for our roles, at least mine in particular, you have to have a positive framework. I think the government's done a great job of injecting capital into the economy and smoothing things out. I think that will continue. So it's going to allow us to be, very agile with our businesses and be ready to react with whatever happens in the economy. The economy will continue to grow. I think people are also getting used, for lack of a better description, used to the pandemic a bit, and it's starting to normalize, whatever that's going to mean in the future. And so, yeah, I do think the future is brighter than it was last March. That's for sure. And so a bit bullish on that. I think it was either David or Troy said, if your business is struggling today, it's going to be likely struggling tomorrow. I think it's hard if you're in a business that's deteriorating or in a sector that's deteriorating. It's likely not going to get better in 2021, in my opinion. So that's the caveat I would say to the data here.
Yeah, that's a great point. And Matt, you said we're getting used to it again. Maybe that's not the best way to say it, but it's not new anymore. We've made a lot of adjustments, and I think what I thought you were going to say was that the stimulus is not new. That's not new. We're almost expecting, or I don't know if expecting is the right word, but that's not so bizarre. And so because of that, we're not expecting a knee-jerk reaction in the market here in the next year per se. And to your point, I think we're seeing it's working, at least in the short term, and we believe we can outrun it, perhaps. So that's great.
I do think post 2021 for businesses and personally, I do think our taxes will likely go up, so the cost base is going to be higher to do business. It's just to pay for this smoothing out of the bumps. It's going to take us some time. So that's the only thing I'd say.
Yep. Great points.
Yep.
Dave or Troy, what I'll do, by the way, just to level set, I'll call on you guys if, I really want to prompt some discussion, or I want to make sure we leave room toward the end too, to get into some of the meatier stuff. So why don't we do this? Stop me, or I'll move on. If you have something you really want to share, just stop me. Okay, so let's go on to this was kind of interesting. So we asked by category of revenue, profit, and number of employees over the next 12 months. I don't know if you remember that when you took the survey, but we asked, hey, over the next 12 months, do you believe these things will improve, stay the same, or decline? And then we converted that to a score, and we were able to. So they're roughly the same. I don't think we should read too much into this. But one thing that's interesting is, revenue got a score up here at 71, and number of employees is at 64. That's right within the margin of error. It's close. But it is statistically significant. And so this number of employees, what we're essentially saying is, yeah, our revenue is going to go up, but we're going to do it with the same number of employees, or about the same number. And so I thought that was interesting. I'm going to move on, unless you feel free to stop me if anything jumps out there you feel compelled to want to comment.
For me, the hidden detail in that would be, I really do think our revenues are going to go up, but we're having a really hard time finding employees. So since COVID started, and I don't know if it was just easier to find a second way to earn income, or things got easier for folks to not kind of have to work a full work week. Just our typical labor base, which is kind of a manufacturing, blue collar labor base, it's really hard to get. We're all competing. Guys that, are in manufacturing are putting up billboards not to sell their products, but to tell people we have open. I've never seen it, right? So that's something we used to see with, over the road truckers. You see all the signs on the side of their trucks like, hey, hiring right now. It's getting that way for pretty much all blue collar jobs. And again, let me put a plug in, a micro plug. Blue collar jobs pay just as well as white collar jobs, and generally your lifestyle is a little bit better. So hey, if anybody's watching this in the future and your kid says, I want to be a welder, do not make a face other than a smile, because that kid's going to do real well and be real happy. So that would be why I said I think revenue is going to go up, but our employees are going to stay flat or just go up a bit.
Troy, that's a great point. I'm glad you brought that up. Other than asking about number of employees, we didn't really explicitly ask much about labor, talent pool, employees. But there were some comments, not an overwhelming number, but there were some comments about just the ability to bring on talented folks, to bring on high quality people, that is an obstacle for people, or a top concern going into this year. So I think that's a theme too, that it is shared across many industries, white collar and blue collar alike. But I think you brought up, I'm sure there are a lot of heads nodding. I can see both Matt and Dave nodding their heads as well.
Definitely.
Great. Any other comment, or I'll move on?
I want to thank Troy for saying what he said about blue collar needs. I think it's a trend. So I'll just leave it at that. They're very, very much needed. And I'm hoping that we can change the paradigm a bit on that front.
Yeah, that's a great point. I think, for whatever reason, the term blue collar and white collar even still carries a stigma about it, which, it's just a trained labor, more of a labor. It's just a classification of laborers. There really shouldn't be any sort of stigma about it. But that's still what we're facing in America today. And hopefully, like you said, hopefully it's something that, we're seeing that trend is people aren't feeling as much of a compulsion for college or for a quote unquote white collar or corporate job or whatever. And so that is becoming more socially acceptable, but I'm glad y'all are pointing that out and saying that that's something that trend needs to continue, gain more speed.
Yeah, I'll tell you, the way it started, blue collar and white collar, obviously is just how you dress, right? And it's really represented here. This is as dressed up as I felt comfortable coming to the plant in. And they've already made fun of me. I had like 4 people walk.
That's great. Hey, thanks for getting dressed up for us.
Yeah.
I think you just took off your hat, really, is what that was, right? Is that like tear away Velcro as soon as it's over? You're gonna tear it away and you'll be back in your overalls or whatever.
I have a different sweater to put on in my other boots. So yeah, this is just my video. So this is as pretty as I'm gonna be all day, folks.
Awesome. Well, Troy, I apologize for being, the source of all the ridicule you'll get all day today. All right, well, hey, let's move on. So then we looked at goal achievement. We asked folks, as you probably remember, we asked of your strategic goals, what % do you actually achieve? Before we go here, I won't put you all on the spot unless you really want to speak up. But I really didn't know what number to expect. Of course, we work with clients. I talk with people all the time like this. But as far as a number from a survey of when we ask what % of your strategic goals do you actually achieve, I could have taken a guess, but I didn't really know what to expect. So the data, before I show you, do you want to take any guesses, or do you want me to just give you the reveal? All right, silence. Okay. All right, here we go. So I think it's on this next slide. Yeah. So it's about 50%. 50%. And if we look back, the way we asked this was over 3 time horizons. Okay. So let me just lay this out for you real quickly and we can unpack it a little more. So we asked over the prior 36 months, what % of your strategic goals did you achieve? And that was like right at 50%. Then we asked in the prior 12 months, of course, that was the beating of 2020, and it dropped down to about 45%. Of course, the scale on this is so we zoomed in a bit so you could see the difference. But even over the next 12 months, even with the promise of 2021, I just showed you, the future looks bright. We're going to make great revenues and all that. Still, when it comes to goal performance, we're at 55%. So we range between 45 in a bad year to 55 in a good year. Somewhere ballpark. Flip a coin, 50% we might achieve our goals, strategic goals. And of course, that is a loaded term, and we'll unpack this more through interviews that we'll be conducting with executives and get more really deeper insights here. But at least to that question, that was the response that we got. So I don't know if y'all have a reaction to that. I'll pause here. Well, with the silence, I'll move on. You can stop me, but I thought it was. Of course, I'd like it to be higher, right? I feel like we all collectively want us all to be accomplishing more of our goals than that. But we're going to dive into in a minute. We're going to look at well, how baked are these goals? How well defined? How rigorous is your plan? Your strategic plan, your goals, do you use them? Obviously we've all seen lots of different environments where that varies widely. Some people just fly by the seat of their pants and still have some success. But so we dove into that also. And we wanted to compare, of the folks who have a well-documented, well-utilized plan and goals, how do they compare, to the others? So we'll get into that here in a minute.
You think this really doesn't speak to anything to do with the pandemic. I mean, this is probably, if you took this survey 5 years ago, you may have the same results. Prior 12 months, you have some perspective and history, and then people are optimistic, a little bit more optimistic about what they'll achieve. But, by and large, what I think this speaks to is surprising, is that you think you're going to achieve only 50% of your goals.
Yeah, and of course it's self-reported, right? So I mean, the easiest way to not fail at your goals is to not set a goal. I mean, so it's hard to really know that. That's why, like I said, I want to dive a layer below this, and we're doing it right now, just through this discussion, is unpacking it a bit here and trying to get some deeper insights. But yeah, I mean, if I had to guess, I would have guessed a little higher than this, I think. Now that I see it, I don't know that it's that shocking, but I find it really interesting. It's something I want to learn more about. So as we go on, this is a little comic relief. Okay, so I mentioned this earlier. We looked by role, and are you shocked to see that the biggest pessimists between CEO, COO, and CFO were the CFOs? So, yeah. So the CFOs said, now this is by goal achievement, but this held for other. I don't remember what all that revenue, probably almost across the board. The CFO said, no, this next year's not going to be quite as great as everybody else is saying. We'll probably get about 40% of our goals achieved in the next 12 months, whereas the CEOs are up in the higher 50s. Yeah. But that's what we want. That's what we love CFOs for, right? Bring us down to reality. All right. So like I said, that's a little bit more comic relief. I don't know that there's a lot to unpack there, really. Let's dive into, so what are the top opportunities? The question was the top opportunities or challenges or opportunities to improve how we achieve our business goals are, and then you could check all that applied, and this is how they came in. So probably not a surprise to see growth toward the top. In fact, in the very early initial questions we asked, we didn't have that one highlighted, we worded quite like that, and we saw some write-in votes coming in right away, so we were able to make that adjustment. And so sales, marketing, customer centricity, everything to help us grow. Next, accountability. So if you look at the top three, we have accountability, ownership, and initiative. And then in the third place, leadership, all about vision casting, motivating people, prioritizing, decision-making. And visually, you can see growth is pretty far ahead. The next two are equal there. Then there's kind of the next tier below that, which includes quality and excellence and managing these big strategic projects. And then I find it interesting when you have to put your votes somewhere. So management routines, it's maybe a bit of a yawn, but of course, the better you can get into these routines, these cadences and metrics and adjustments and all that, you're going to do a lot of these things up here a lot better also. So it's funny that, it's just interesting that it's down toward the bottom of the list. And then productivity and throughput, it'll be interesting to see in a year, especially as we go forward with a harder to find labor force, how much more important that will get, but that's not real high on the radar. And then financial management was toward the bottom. So unless there are any thoughts or questions you want to share on that, I'll move on.
I think that, I'm really interested in the leadership category. I see that it fell obviously almost tied with accountability, but I believe if you do the proper training and proper leadership training, it will result in almost the rest of these. So maybe surprised not to see that first, but it's tied for second. So yeah, very interesting.
Yeah, that's a great point. And of course, you really can't separate these as distinctly as, none of them are standalone. They rely on each other. And but yeah, you can do a lot with leadership. And it's what's interesting too is we didn't define it for the respondents. So they could take that as reflecting back on themselves, or they could take it as our entire leadership. Everyone's a leader in the organization within their span of control. Were they thinking of it that way? We left it open to interpretation intentionally. Yeah. So that's a great point too, David. Okay, well, let's go on. This was interesting. We'll probably work on the scale here, but what we asked was just on a 0 to 100% scale of those opportunities that we just mentioned on the prior page. What if you could actually go and achieve those? If you could, what are those opportunities worth to your business? in terms of EBITDA in the next 12 months. And so this number came in at 46%. In other words, we will increase our EBITDA 46% if we could convert all of those opportunities to where we want them to be. So if we found this interesting, and then we looked at this also on terms of how well do people plan. We looked at this we analyzed this in a lot of different factors with role, and we looked as much as we could at industry, but like I said, the sample sizes got too small. But what got really interesting was in terms of how well we plan, or how kind of like our maturity, our planning maturity, and goal setting. So let me go to that. And by the way, this is sort of a rhetorical question, but is a 46% improvement in EBITDA interesting in a year? We have Dave smiling and nodding. Yeah, we get thumbs up and smiles. I mean, that'd be pretty awesome, right? So essentially what we're saying is, yeah, we have all these opportunities. Man, we know they're important. We know they represent a huge bump to our EBITDA, and we're just not doing it. And so the next question is, well, why not? And it's, time, and of course we all hear it's balancing working in with working on, right? And that's what the kind of the headline that I take away from that top. It's, we get sucked into the business, and we can't working on those top opportunities. We're more in the working on category to improve our business, not just handle the day to day. And so it's just really hard to make that a priority, to make it a focus, or to carve out the time for it. The second was our in-house ability. It's just not something we have in-house today and within our current team to be able to take on those top opportunities. And then last is we don't have the money to pursue it. Those are the top three. And then this was, we don't really believe. And, there were people about a little bit over 10% who just said, you know what, I don't really believe that if we did that, it would really amount to anything anyway. We saw some other write-ins here around this robust supply chain. Here's the talented and qualified workers that I mentioned, and board support. So you see some other comments there. Okay, so we only have about a little less than 5 minutes left. I want to make sure we get to this, because these were some of the bigger takeaways that we had. I mentioned that what we did was we listed how well on these dimensions of how well utilized and how well documented. So if you remember, we asked you to choose this, and are your strategic plans and your goals. And then based on that, we analyzed, and we were able to come up with this maturity. And that term, if you're on the low maturity, don't take offense. It just means that, other folks are building their plan in a more rigorous way and using it in a more rigorous way. And we saw some differences in the data. So I'm just going to set this up real quickly, and then we can chat about it a little bit. So I know there's a lot on the screen here, but here's what we see. On the left side, they're sorted by maturity. So on the left side, this is higher maturity, and then on the right side, this is lower maturity, all the way down to not documented at all. And there was like 2%, as you saw on the prior slide, that don't have their plan or goals documented at all. But, as we move over to the left side, there are a few things that we see. One is, look how tight these are. They're not that far apart. Whereas the others, you see a lot more erratic spacing, the gap. And that's what this chart on the right here is measuring. It's the standard deviation of that gap. So essentially, the way I interpret this is, the more mature I am, the more I think these three things, my goal performance, the economic factors that impact my business, and my revenue, the closer I think those are. In other words, I have external forces, the economic impact on my business. I have internal forces, which are, my own performance. And then I have the result with the revenue. And so I look at those as, those are all going to be pretty well aligned in my world, because I have a plan, I operate by it, I don't have a lot of surprises. Whereas these other folks, to me, it almost sounds like, look at how low the economy is on the right side, where they don't have as much maturity, and even in the middle, but yet relatively their revenue is way higher, right? So it's almost like wishing, I don't know how, but I just know our revenues is going to go up. So that was the takeaway that we had on this slide. Let me just glance ahead in the interest of time and see if we can go one. We'll go one more ahead and then we'll unpack it. So just going a little further, building on that concept, the more mature folks, now this time they're on the right side of the screen. So the more mature folks also believe that we'll have a higher impact on EBITDA. So remember earlier we asked what's the average was 46%, that if those opportunities are worth your EBITDA. But the more mature folks see it as a higher impact, whereas the lower maturity folks think, yeah, it's not really going to impact your EBITDA as much. There's not a huge gap there, but there's a distinguishable gap. So I'm going to go back to the slide and just see. So what do you have any general reaction to that? I kind of threw a lot of concepts at you all at once.
Well, my initial reaction is it goes back to that word at the top is maturity. I think as an executive, I know and believe that if you put a plan together and have goals and catalyze the organization around those goals, your performance will be better. It's that concept of working on versus in, I think that we struggle with depending on the maturity of your business. And at times, sometimes you just have to jump in and do operations or sales or customer service. And so some of the things that will work, like documenting your goals or vision casting and those things, they take a back seat. So and I think many of us probably in that middle category where you've got somewhat documented but extremely high revenue that goes back to, well, we're just going to jump in and we're going to grind and we're going to win by sheer will and grit. And so I think that's just, and I have it as well, a little bit of, for lack of a better description, fake optimism to an extent. You can hope, but you also have to have a plan as well. So I do think a lot of us lived in that optimistic category, and it's perfectly fine. I think it's part of having an entrepreneurial spirit, but this data reminds me that, the blocking and the tackling of goals, vision casting, and telling your folks where the organization's going and how they fit into that vision will create better performance. I mean, I know that inherently, and yet our organization is a somewhat documented organization.
Yeah, I mean, I think back in my past, I think about an organization where we would rate ourselves annually. We'd look back at the prior year and rate ourselves in several different categories. And it was useful. I mean, at least we got to rate ourselves and we had some trending, but we never set the standard. So, on a scale ABC, let's say, an A-, we'd look back and we'd say, that was an A-. Well, based on what, I don't know, based on what, we didn't upfront define this is what an A+ looks like. And as we went on, there were some definitions that we added, but even those were, really subjective. And so I think one of the takeaways that I had from that experience was, okay, let's not let great be the enemy of good. At least we were doing something toward trying to measure and improve. And so, it's not where we should have been, but we continued to improve it year after year and started to set that standard over time. So, I don't know, do y'all have any other stories that you'd like to share or comments that maybe from your past of where this was done well or maybe where it wasn't done so well and what we can learn from that?
Well, I think Matt said, sorry, David, you go ahead.
Go ahead, Troy.
Okay. I was going to say, what Matt said was exactly right. We all have this optimism of finding a big pot of money and working really hard, hustling to get it, right? And sometimes that happens. And I've started a couple companies, and I always remind the other folks around me that the number one killer of small business and medium-sized business is success, not failure. Success. When that moment happens where there is a pile of money and you all have to grind to get it, but you don't have the documentation behind you, maybe you don't have the team, you don't have the process, and all of a sudden you get twice as many customers and you do half as good a job, and it hurts your reputation across your entire customer base. So you've got to be prepared for those moments, those kind of wild moments, great success. I remember one time I was an executive at a mobile phone application company, and it was like New Year's Eve. Something big happened. I don't remember if that was when Michael Jackson died or something happened, and we were all just thinking, hey, there's no big deal. But so many people did our applications, one of them even knew that. And this was before the iPhone. So we're talking 2008, 2009. And it crashed all of our servers. And we had scaled to triple, quadruple, quintuple our servers. And you just can't there's not enough cloud out there to eat up, 500 million people wanting to know the latest news at this moment. That hurt us across all of our retail vendors, across all of our phone vendors, across, and so we had a lot of explaining to do on Monday, right? And it wasn't a fun conversation, but people understood, but then they're like, well, I guess you weren't ready. You weren't quite ready for the big league. So when you get your chance to play in the league, in the big league, be ready and always be prepared for that weird fastball that's going to come out of nowhere and that success you've always been praying for. When it hits, man, don't mess up. You don't have many times you don't have many swings at that hit.
Yeah,
that's a great point. Oh, go ahead, Dave. You had something you wanted to say too, so go ahead.
No, that's really interesting, and I know we're nearing the end of this. I think from my seat, as we're looking and investing in different opportunities, it's fairly easy to go out there and raise money. So it becomes very competitive. What is your value that you can add aside from just writing a check? And so our interest is helping bring maturity, helping, having some battle wounds, some successes, and then certainly more failures than successes. And as Troy was speaking about, and Matt, bringing that to the table is what the competitive differentiator is for us, right? It's not just writing a passive check, but it's writing and making an investment into an opportunity where you can help accelerate somebody's maturity, because that's what young entrepreneurs are looking for. Early stage is looking for, how do you bridge that gap? So that's it's what we're faced with right now, and it's the value that we can add.
That's a great point, and I'm just gonna end the share here and make our faces here full screen again. But I just couldn't help but think about the baseball metaphor that you used, Troy, and of course Moneyball came to mind, and I just thought, and I don't know how much y'all watch a lot of the reality TV business type shows. One caught my attention recently, which was Undercover Billionaire, which is just I really recommend it. It's just a great show. Of course, there's The Profit and Shark Tank and some of those others that give you a glimpse into, you get to see so many different environments. Of course, it's not real, even though it's reality, but it gives you this glimpse. And so it's like our own personal study, like think tank of case studies. And so anyway, one theme that I see so often is, like Moneyball, it's a game. The business world is this game of precision. And so sometimes just a small change, you might not even realize it's happening. Your batting average moving from, but I would assume like moving from 250 to 275 might not feel different. So unless you track it, unless you're rigorous about it, unless you have some maturity about it, you might not even realize the change. Of course, we've experienced that when we work out or exercise, that you might not feel certain improvements. You might not notice. And then you realize, oh, when I time that, actually I'm a lot faster, or I didn't realize I'm not getting winded as quickly, or whatever it is. So I just want to offer that also. Well, as we wrap up, I'll make some concluding comments here, but I just want to thank you guys. Do you have any parting thoughts before we go into the wrap-up portion of the meeting?
Well, just thank you for the opportunity, Ryan, and it's always good to see data from your peer set, and know that we're not alone in the challenges that we all face, and that we can have conversations like this and hopefully, through 2021 improve and do better than we did in 2020 and react to what's going on with the pandemic.
Yep. Awesome. Well, hey, thank you all again so much, Matt, David, Troy. Thank you for being on our panel here today. And I just am so blessed to know you guys personally, and thank you for joining us as our panelists. I also want to just add, you guys just brought such a, more depth. I really appreciate it, more than I would do on my own. And so, and even, the report, you brought out all kinds of other points that just weren't sitting there right at the surface. So, hey, this is still early in the year as we're releasing this report. And we just hope that these insights and this discussion are all helping you see the year ahead with more clarity. As I say in the cover letter in the report, we hope that we are helping you see around corners, or at least something close to that. Again, it's a game of just minor improvements having a major impact, especially over time. So that's what we want to equip you to do. And so guys, feel free if you want to You can take a rest and turn off your cameras or leave the stage, however you want to do that. You're free to do that, and I'll just wrap us up here. But we want to. Here's our offer to you. If you'll schedule a 30-minute briefing with us, you'll receive an expert view, providing clarity on what are your top opportunities and a plan to go forward. So if you're not on track and you want to get on track, or if you're not sure, you just want to talk about it, that's fine. Give us a call. No obligation, no fee. We'd love to have that discussion with you. At Perigee, we specialize in helping the leaders of SMBs in America cut through the complexity and get on track. And we accelerate outcome. We talked about acceleration a lot here today. We accelerate outcomes and we ruggedize your business so that maybe you'll bring in that successor and you can do that more successfully. Maybe you can get top value so that you can get top valuation from your business to exit, or maybe just get some equity out. Whatever your goals are, improving, ruggedizing the business and accelerating outcomes is what will help you do. And so whatever your goal, we offer coaching, training. We'll even roll up our sleeves and run some of these top projects for you. We saw that in-house ability was right up there at the top. And we have really value-based pricing that's really well aligned to your goals. And so we saw another top obstacle was cash. And so don't let that stop you. We have some really creative offerings. And we can be a seamless extension of your leadership team too, if that's something that you need in your environment. So we really have a spectrum of offerings, and we'll recap the event. We'll send you some materials. We'll send you follow up, and then watch also for more roundtables like this. We'll be continuing these, and we hope to see you in the future. And so I just, again, want to thank you guys. Thank you, panelists, Matt and David and Troy. And we'll go over and just take a look at any questions. Let's see how we're looking on time. I want to do a quick time check. Yeah, I think we're right on. We have just about 5 more minutes. And so as we look at questions, we have, let's see, let me scan through, and here's one. Panelists, feel free to jump back in if you'd like, or I'll just address these and we can wrap it up that way. But so if I see any that are called out specifically to you, then I'll call that out. Otherwise, I'll look to answer the question. So what do you recommend when you have a plan, but then reality hits and your plan hits the shelf? Then we get behind in our plan, and it isn't even relevant anymore, and we never use it. You know the drill. So I'd say, I've seen this. This is pretty common, especially at small businesses. It's so erratic. You start to work on the business, you start to do good things, and you just get sucked back into the day-to-day. You lose that top client, or a pandemic hits, or whatever, crazy unforeseen event happens. And so what's so important, though, is just like exercise or anything else, I think exercise is one of the best metaphors we can look back to, is it's never a bad day to work out. It's never a bad day to get back on track. There's never a bad day to start eating right. Every day is a choice. And so don't let the past hang you up too much. Don't worry about rewriting. I mean, even if you just had a quarterly cadence where you pick the plan back up and you say, okay, last quarter didn't go like we wanted. What are we going to do differently this quarter? And you pick it back up. I'd say a couple other things. One is doing the working on stuff while you're working in makes the working on stuff a hobby. And so hobby jobbing, really important things. Like I've seen post-merger integrations. I've seen a smallish, $10, $20 million company acquire another company and try to integrate that and do that as a hobby job. You're not going to do that as well as you could as if you were dedicated to it. So, and that's just so hard to do at a small business, to dedicate resources to some of those top priorities. And a lot of times that's what it takes. So there's any way that you can make that happen, or bring in a third-party resource that you can trust. Those are some strong recommendations, but really the main thing is have a cadence. Make sure that you're revisiting it and that you don't fall off that cadence, because even if you lose a month or a quarter, your cadence I know that we're going to meet again. I know that we're going to pick it back up. You won't continue to decline. You just had a gap, and then you can pick it back up and start performing again at the level you need to. The other thing I'd say is you need to adjust your goals and plans quarterly anyway, because especially with small businesses, there's just so much change. Even though you can lay out your year, it's going to be a very rare time that you're going to perform exactly like you planned at the beginning of the year. Let's take a look. What else do we have here? I hope that answered your question. And feel free to reach out afterwards if you want to dive into that any deeper. Okay, we actually just addressed that one. So this is an interesting one and something we'll dive into more, which is what time of year do you start and complete your plan and goals? Okay, so when do you do this stuff? What time of year? And, my perspective, and I'd love to hear y'all's too if you want to jump back in, but my perspective is bigger companies tend to be more mature about this strategic planning process. I remember one of my clients years ago, one of my bigger major corporate clients had a SLRP. It was their season of SLRP, which was strategic leadership. Now I forgot the rest of the acronym, but every year they had a period and you knew they were in their strategic planning season, and it was kicked off and they did a whole process, and then it came to a close, and that was all toward the end of the year, their fiscal year, so that when they started their next fiscal year, they could launch right in and start executing on their plans and operating their goals. Now I say that, and I've also seen companies, I'm sure you have too, where even their sales quotas aren't set until Q2, deep into Q2. And so, it's not unusual to see that, but I'd say the standard to really look for would be do this at the end of your fiscal year. So fall is often when strategic planning season starts. Football season should get you started. And so that you can, even if you have some wrap up to do in January, you can really kick off at least in Q1. Right now, you can be starting on, you can have your plan and not still be formulating your plan. But the nice thing is, at a small business, we're nimble, right? So we can, you could go away for a retreat next weekend or in 2 weeks and knock this out and make it happen. And especially if you need help to facilitate that, let us know. That's something that we can make happen for you really quickly. And you can get a lot of value out of that right away. Well, listen, we're at the end of our time here, so I'm going to wrap us up. I think that, that's all of our Q&A, and I'll just wrap us up quickly since I think everything else has been said. I hope that you found this enjoyable and applicable to your business, and we look forward to seeing you again. Like I said, watch for the follow-up. Reach out if you have any other questions. Thank you again so much, panelists, and thank you, attendees. Goodbye.